Hello everyone and welcome back to Kate's Corner. My name is Kate and here I talk about finances, credit scores and hitting your targeting budgets, and it's all about self-improvement. If you're new here, then I would greatly appreciate it if you consider subscribing. And to the 80% of you guys that watch my videos without subscribing,
you naughty.
Do you not want to win an iPhone 12? Do you not want to win a MacBook Air? Do you not want to win that? Don't forget about the experiment. If you need a quick reminder on how to win, then click the link here. Before we get into the video, I'd like to say a huge thank you guys for watching my video, because we've already reached 2k views on my first video, which is incredible, and I'm so grateful. Today we'll be focusing on credit score and we'll go in depth on what it is, why do you need it, it's all about why you need to care and how it's going to help you in the future and why you should start building it right now. So if you've been listening closely to the previous video I uploaded, then you will already know that a credit score is just a number that basically represents how responsible you are with your money. Now, to make it more clear and help you understand the importance of credit score, I'm just going to give you a few examples. So last year, me and my friend decided to treat ourselves to new phones, and we decided to look at what options are out there. So we both decided to purchase from the same mobile operator, and for that purpose, we had to sign a 2-year contract, pay monthly contract. However, only I got approved and he got rejected. And this came as quite the shock, as I didn't know anything about credit score and he got rejected. And I didn't even know that you could get rejected for that. Basically what they said was, oh, you're not getting the phone because we conducted a background check and you had a very poor credit score. And that's what sparked our interest to understand what that meant. Because at the time, I was literally like, why? What is going on? I don't understand. Still flexing, but I don't understand why. And now, in my experience, there's a massive misconception going on, because every time I mention the terms lenders, loans, owing money, everybody just imagines going to a physical bank and taking out a certain amount of money as a loan. Which, yeah, sure, it can very well be the case. It most certainly isn't the case all the time. So, for example, EE, O2, Vodafone, these are all lenders. And the loans that they provide, for example, phones, tablets, etc. In our case, we just took out a phone as a loan and committed to pay monthly for 2 years. So they provide us with the product in advance, therefore the phone is just loaned to us. When I say background check, what I mean is they check your credit history and check for trends on how well you manage your credits and how well you spend your money. By the way, if you're enjoying this video so far, please give it a big thumbs up and subscribe if you haven't already. So if you're a second year or third year student, you're most likely renting a house, and unless you've been very lucky and all of your bills are included in the rent, then you have a lot of utility bills that you have to think about. So for example, you would need broadband. All the broadband providers are lenders because they lend you a service. You get a router and you get the service provider that comes with the router. Therefore, this is again a loan, and you sign a contract which you commit to paying monthly over a year, 2 years, whatever period of time. Therefore, if you have a poor credit score, there's no broadband for you. And a little tip, if you're actually living with a group of people, it's actually a really good idea for you to sign the contract and you pay the bill, because this is going to reflect on your credit score. So, keep that in mind. And, you might be thinking, oh, but what if they don't pay me on time or whatever? But, this is only a 20 to 30 to 40 pound bill a month. And if you're struggling for that money, then, you might want to consider multiple streams of income that we've covered in the previous video. So have a look at that. However, not all monthly contracts and direct debits would contribute positively anyway to your credit score, because there's some contracts have no commitment to them, so you can cancel at any point. If you sign up to the gym for whatever reason, and if you're like me, then you're just not going to go and pay for no reason. However, in my defense, even if you do go to the gym every day, it's still not going to improve your credit score, It might improve your health overall, but not your credit score. There's no actual commitment there. You can cancel that contract at any time, unless there is some sort of contract deal that requires you to be a customer for a period of time. So, if you can cancel your contract at any time, it's most likely not going to improve your credit score. However, it can affect it negatively, So, for example, you set up a direct debit. You have one too many takeaways just before the direct debit's set, and you have no money, and the direct debit doesn't go through. Therefore, it shows up as missed payment. That was a scheduled payment that was missed. This is equal poor credit score. You don't want any missed payments whatsoever, because this is really bad for your credit score. Because this means you're not reliable with your money, you don't know what you're doing, you don't remember that you need to pay, and you didn't plan that out. You didn't plan that you would have to pay this at this point, and therefore the direct debit didn't go through. In the case that you don't win the iPhone 12 from the experiment that, I'm conducting, if you decide to buy it for yourself, the company you're buying it from, like whether that is Curry's PC World, I don't know, many places, or directly through the Apple website, unless you have, the full amount, then good one. But yeah, they're gonna check and they're gonna see that you have a missed payment, and they'll be like, oh, they couldn't handle that 20 quid bill, and they're gonna handle paying for the iPhone? I don't think so. Therefore, missed payments, no phone, no broadband, poor credit score. We don't like that. So if you remember my poor friend from the beginning of the video, now that I think back, I'm like, how did he think he was gonna get approved? Of course he was gonna get rejected. The audacity! He had no current account set up, he had no credit history, and he had a missed payment. He pretended he was gonna go to the gym, yeah? And then all he did was miss a payment. Well done, well done. Whereas I, on the other hand, I had set up a current account as soon as I moved to the UK. I had no missed payments, and I had credit history because I'd already set up a Virgin Media broadband, thing. And I had a steady income from my part-time job. So without even realizing, I had already started building my credit score. And it wasn't excellent, obviously, but it was better than his. And that was enough for me to get the iPhone and for him to get rejected. Let me just pop up here and say, sorry for interrupting here, but I'm not a professional. Please don't listen to me. This is all for entertainment purposes. And please consult with a financial advisor if you need any financial advice. Oh, and before we continue, subscribe and like. So credit score, you could just be, some utility bills that you're paying, any sort of contracts and commitments that you've made, and even your current account as well. So that leads to the obvious next question. Who decides what your credit score is? Who wakes up one day and decides, oh, this person is, very responsible, they're going to have an excellent credit score. This person, like Nick, my friend, why does he have a poor score? Because he's not responsible. Is it the banks? Is it, the lenders? Who decides that? And the answer is neither. They're actually separate entities, completely separate entities, and they're called credit reporting agencies. There's 3 main credit reporting agencies, and they are Experian, Equifax, and TransUnion. They serve one purpose only. They just review your credit history and determine your credit score. And then all of the lenders, all the banks, everybody consult with one or multiple, or in some cases multiple agencies, while they also report back on how you spend your money. That's how they collect their data and decide whether you're reliable enough for that purchase. So if you got to this point of the video and you're thinking, wait, what is my credit score? How do I check it? How do I know what it is and how much it is? So there's 3, obviously the 3 credit agencies have their corresponding websites. So these are Experian, Equifax, and TransUnion. Links below. Please go and have a look so we can, have a little conversation on how to improve and, you could already have a really good credit score without even knowing it. So please let me know how well you're doing. I would personally recommend using mobile apps because it's just, a lot easier to do, but it's just a personal it's just a personal preference. There's the Experian app. There is ClearScore, which would show your credit score according to Equifax. And then there is Credit Karma, which will show your credit score according to TransUnion. You can use multiple apps, and these are the 3 that I use, but there's many others that you can, Google for yourself if you don't trust me. Oh, by the way, all agencies have different scales. So for example, in Experian, the maximum that you can get is 999. And this is, an excellent score that everybody dreams of. So having a decent credit score is not going to just help you, get a phone on a monthly pay contract basis. There's a lot of other benefits that you should consider. You could get a credit card with a lot of nice perks. For example, cashback. So cashback, what is cashback, you might ask? Cashback is literally just purchasing something with your card and then getting a percentage back. Another benefit is that your credit card is going to come with a higher credit limit, which, in itself is a great, you can use it as a safety net because you can cover any unexpected expenses with your credit card. So you're stranded somewhere, your flights are cancelled, there's no way to come back. If you need to book something for tomorrow and they're really expensive, But you have a credit card, you can cover it with that. And if you have cashback on it, you're gonna get money back as well. So another good benefit is once you apply for a car loan, you might get a lower interest and therefore pay less when paying it back. If you wanna buy, I don't know, a Tesla for 40K, this is a made up number. Don't quote me on it. But if you wanna buy a Tesla for 40K and you get a car loan for it, then depending on how good your credit score is, this is going to affect the amount that you're going to pay back. So if you have a poor credit score, you would have to pay 45K back, whereas I have, a decent credit score and I would have to pay 42. As I've previously mentioned, excellent credit score is also, going to benefit you in the long term when you, want to apply for mortgage, when you want to get a house, and also any loans, not just car loans. This is going to be essential if you want to start up a new business. You're going to need to take out a loan. So building your credit score is always a good thing. You will never lose anything out of it. And it's not too much of a hassle to build it. So you have to start from early in order to build it and get to excellent. And then it only comes with benefits once you're there. And lastly, I am sure that you've been in a situation where you put one too many items into your basket. And when you went to the checkout, the grand total made you up. Yeah, that's happened to me multiple times. I'm sure that you've considered in that situation, splitting that into monthly payments with a good friend Klarna. But don't forget that Klarna has them high standards, and she can easily reject you if your credit score is in the red. The main takeaway from this video is that credit score actually affects your daily life way more than you probably expected. And most importantly, it can actually help you save a lot of money. So if you'd like me to help you build your credit score the way I did, the way that Nick did, if you'd like to hear my advice, all of my tips and tricks that I have to give you guys, then don't forget to subscribe so that you get a notification every time I post and you don't miss any of my tips. And there's also some secrets that are coming up, so don't miss out. And a final reminder, if you want that iPhone, if you want that MacBook Air, then you know what to do. Click the link here, somewhere. Subscribe, comment, share the channel, tell everybody about it. And don't forget to give it a thumbs up, big thumbs up, and share with all of your friends. Bye!